Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Today, I'm bringing you a technical analyst. Why? Because it's crazy out there. And I just think sometimes the guys that understand the charts and understand the psychology of the markets can sometimes show us what they're seeing in terms of volatility, what's happening. And you all know I'm a bit of a gold bug, if you like, although I just say gold is money. Anyway, I've asked Patrick Karim from North Star Bad Charts, love that name, Patrick, North Star Bad Charts, to come and join us all the way from Quebec in Canada. So welcome to Small Caps, Patrick. Good to see you.
Kerry, it's an honor to be on your show there. So I can't wait to get into it there and share for your viewers there my thoughts.
Well, this is the first time you and I have chatted. So if you could just, who are North Star Bad Charts? And I have to ask you this question. Where did the name North Star Bad Charts come from? Because maybe people go, oh, are they bad charts?
Yeah, it's, well, the North Star side is my partner, Kevin Wadsworth. We have a website there, northstarbadcharts.com. And my handle is Bad Charts. And guys, it's just like, I don't know, it's like a misnomer, you know. A while back, I wanted to start like I wanted to do a blog or YouTube, so it could be like a journal for me, you know, to see how I progressed or like over the years as a chartist, because I knew if visually I could see my actual like reflections on charts, how I drew the lines, it would help me evolve better, you know. I could see my mistakes, and I'll have a mirror of truth. And I said, okay, I need a handle. I can't just like go and just go as Patrick, you know. And yeah, so I just came up there with this name. Said, okay, well, my charts, I'll try to prove that my charts are not bad. And year after year after year, they're just trying to make them better, trying to find new clues to how we could see the advantage we have, you know, in trading, because that's essentially the charts, right? They're there to give you an edge, right? You want to try to see previous human psychology through the price action of the charts to be able to figure out the next probabilities of the next possible moves. So yeah, hopefully it's a misnomer by now, but I still get trolled about it, you know, when I do a call that's not so good. People say, Patrick, your charts, they are bad.
Yeah, but you've called it very well. So let's let me ask you one question before we get stuck into some of the areas. How important do you think charting is to understand what's going on in the markets? Because there are people that will possibly turn around and say, well, you just buy shares in a good company, you should be fine. You don't need a chart for that.
Man, look, if I could just go to the recap, why I fell into charts, like in 2006 or 5, started my consulting career as an IT specialist and started having some money coming in. And then so, okay, I'm kind of like a contrarian at heart, you know. So I can't give my money to my bank and he's just going to buy mutual funds and take his fees. I wanted to take control. And what do like first time investors, what they do? They Google buying stocks, but it's like the tourist trap in any country. When you land, let's say you're in Paris and you get out and you see Champs-Élysées and then there's a few restaurants, never go to those. Those are the tourist traps. The good restaurants, they're in a small alley that only a French person knows, right?
Right.
So I fell on these websites, penny stock forums. Like I almost got wiped many, many times. I had no risk money management protocols. I had nothing. I was flying blind. Just, oh, this guy says this is the next new thing. But in hindsight, when I look at those charts years later, I was buying at almost the top. And I'm pretty sure that's what happens all the time. When somebody talks to you about Bitcoin, when somebody talks to you at the water cooler about something, it's too late because they're living based on past performance. The fact that you're talking good about something is because it performed. That performance, it depends how long it's been going. It's usually by the time you hear about it, it's close to the end, guys, and get trapped. You want to get into something, and only the charts could show you this when nobody's talking about it. Because how could you know about something if nobody's talking about it? The charts, unless you really know somebody, let's say in a niche market, and he's able to guide you. But charts are available for everybody, and with good technical analysis, you're able to spot exactly the areas where nobody wants to enter.
Well, there's a few areas that people, and I love that. I'm a contrarian as well because I love it. I say to people, when no one else is watching, that's when it gets really interesting. So let's chat. You mentioned the Bitcoin word. Now, not everybody is into cryptocurrency. but we've got to bring it up because it has been smashed. As we know, November last year, up at around 69,000 USD, which was about 80,000 Aussie, now smashed down. I'm not quite sure what it's trading at today, but what's your view? What are the charts telling you about Bitcoin? And I guess the cryptos on a whole. Would love to hear your views.
I don't know. I have a great chart for that. I could show you. I don't
Please
know if,
share charts. We love seeing the charts.
All right. I'll share my screen because this is going to be the perfect segue to show how charting can help. So I have to search. I do so many charts, Carrie, that
there he is.
I use
bad charts. There you go. If you want to follow him on Twitter, badcharts1 at badcharts1. So
somebody took bad charts before me. Could you believe that? There was actually somebody who took bad charts. Like, yeah, and it's not a chart trader. I don't know who. It's like has nothing to do with chart trading. So funny.
Let's get rid of him. All right.
Okay, so check out this chart. Look, this was crazy when I did this post in 2020 in February of 2021. Like I got a lot of hate because that was when Michael Saylor, like this Bitcoin, I'll pop it up and make it big. It hadn't even started pulling back. It was going crazy, right? Because like you said, it went up to 65,000 or something above that. But I'll bring your attention, people, to how to spot fear of missing out. This is the best tool ever. This is a distance from the 12-month moving average. So the way you got to see it is nobody wants it when it's close to the 12-month moving average. That means it's been going sideways for a long time. It's not stretched. There's no volatility. So this is the first bull run Bitcoin did in 2017. It got stretched about 222% away from its 12-month moving average. So that set like a high watermark. And what happens after that when you get too stretched? Well, the people who bought in low, they go for profits. They're profit taking, and there's no more new buyers, right? All the buyers, they pushed it up. And now you're so stretched, you're like Kid Icarus in the sky, the sun melts, and then you fall. So now you're going to a huge base. Nobody wants it. And this is the healing process. See it spike up, down, heals. And that's beautiful. All the people who bought higher up, they went on to something else, the next fad, whatever. So here again.
That's the boring phase, I guess, is it, Patrick? That's when everyone goes, it's not doing anything, so I'm going to go find the next shiny thing.
This is where you want to buy, Carrie, here, just not too early, but when it starts turning up, and I could have drawn a breakout line here, when it starts breaking out about horizontal resistance above and inclining when you're moving average, that's when you have low risk, high reward. And here, as this thing was getting stretched, I said, okay, there's a lot of fear missing out, everybody with the laser eyes. And then I said, how far could it go away from that 12-month moving average before crashing? And I said, we're so close, guys, to the top because we're so stretched already. This thing's going to topple over. And what happened after
wow, look at that.
I'll show you this on TradingView. What's fun about TradingView, all those drawings, you can't change them. So you click on the play button and then you see what happened. The month after went a little high. These are wicks above it never closed. One time here, closed above that 59,000, but it was game over. After that, it just tumbled. So I've been bearish. Like as soon as I saw that, look, the hardest thing to do is sell into strength because everybody's talking good. How could you sell, Carrie? It's going up, or it's going to go to 600,000, a million, Carrie.
Yeah.
You know how it was.
Yeah,
just
like, I do because I'm still bloody holding some.
Yeah, Bitcoin.
Yeah.
Well, look, you don't know how. Like right now, it's in the healing process. Usually, the time it took to go up and down, if it crashes more than 70%, you need a multiple. It could take 8 times the time it took to go up and down. You have to add that going sideways. So it's tough now. So now you've become a bag holder for a while. We don't know how long. And look, I'll throw you a curveball. The NASDAQ and Bitcoin could actually go up nominally. So this thing, Bitcoin, could keep going up. Let's say, and retest this.
Okay.
But when you measure in gold, it could actually be going even lower. And that's the trap in inflation area. People look at nominally. Look, I'm back to 3 years later or a year later. Look, I'm back at 60,000, but I'm sorry, your 60,000 today is not going to be able to purchase you the same amount that it did 2 years ago. There's 10, 20% inflation that happened. And people don't see that. So in an inflation environment, if you don't outpace inflation, or if you don't outpace gold, which is a true reflection of your purchasing power, you're not in a good situation.
You're talking to the converted there when you mentioned the gold word, and we'll come back to that in a moment. But let's just staying on the sort of the Bitcoin mania, if you like. The charts are telling you that it could go further, but as you say, it could still go back and test the 60,000. But it doesn't mean that 60,000 will purchase you what it would have purchased you the last time it went to 50,000. Is that what you're saying? So
Exactly. Everybody has to start price. Look, there's a great website, guys. It's called pricedingold.com. This guy's a genius.
I've got it. Yeah. It's great.
Look, he tells you how much a Big Mac costs in grams of gold, a toga, the classic gold guys who like saying that they're like an ounce of gold will buy you a fancy toga in the Roman days and will buy you a fancy suit today.
Yep.
And that's how you gotta, that's how you gotta measure stuff, guys. And look at this. This is
what are we looking at here, Patrick?
This is Bitcoin measuring gold. So this also is not looking super, super duper good. And until this line, this is what I call the wake up line, Carrie. So let's say, guys, you're on the side. Okay, I understand. You love crypto. Whoever wants to buy it, fine. They believe in it. Until you close above this line, why buy? You got to wait because, guys, history has shown you that these wake up lines, until you close above them, the momentum is still going down. It could take, it could bounce up, go down, bounce up, go down. So I'm not even going to look at cryptos until this, what I call my wake up line, is at least closed above. And even then I still might not buy if it's underperforming gold or stuff like that. So stay clear, guys, because you don't know how low this is going to get. You just don't. It could go.
But Patrick, what about those people that are just holding, for example, Bitcoin and just saying, I don't need it now. I need it when I retire. I'll just let it sit there and I'm not a trader. I'm a holder.
Look, I'll tell you what's wrong with that is Bitcoin. Okay, I'll show you another chart because that was the problem with Bitcoin, Carrie, is that it was born in 2011, and that was the start of the tech bubble.
I'll
show you. The thing is, for me, it's easy. If you want to see how the Bitcoin is going to perform, it's just going to follow what the Nasdaq has been doing. I'm just going to find this one. I keep putting this one out. So this is Nasdaq measuring gold. So I have more data, and this is Bitcoin measuring gold. And it was born here. So you always got to zoom out because there's no day-to-day correlation. But when you zoom out, you see that so if gold is outperforming the Nasdaq, so capital flows are going to gold, and then gold miners and silver, they all go up. When gold, look, even this is crazy. Nasdaq, look at the top here. We know nominally the Nasdaq is much higher today, but when measuring gold, it still hasn't gone above its 2000 highs. So even if Nasdaq is much higher today, your purchasing power has gone down so much that even the Nasdaq today has not surpassed its ultimate bubble of 2000. And that's what could happen to Bitcoin. So even if Bitcoin goes up nominally, or they want to hold 10 years, there's going to be so much inflation that it'll be worthless, even if it comes back to 60,000. And
right.
I'll tell you another clue. NASDAQ is able to rotate out companies that go bankrupt. SPX 500, the top 500, they're always skewed higher. That's why when you look at a chart for SPX or Dow Jones over like hundreds of years, they're skewed upwards because they could rotate out the bad stuff. Yeah. Crypto cannot rotate itself out. It just can't. So if nobody wants it bad, it's over for it. It has if capital flows don't go into Bitcoin itself, it's like a mining company that goes bankrupt. That's it. Nobody wants it, or it becomes a dormant company. And if I could just finish on one thing that people have difficulty understanding, and that's part of the emotional aspect. Whatever something does and whatever the market prices it at doesn't change the functionality of something, its intrinsic value, right? If I have a house, whether it's worth 50,000 or 2 million, it's the same house, same bathroom, 4 door, it doesn't change. People thought they got all happy because they saw the price go up and it's getting adopted. But Bitcoin never changed what it was. It's just a speculation on the capital flows going into US equities, tech stocks, instead of going somewhere else. And people, they think that the price action and the fact that it goes down in price, it doesn't change any of the attributes of Bitcoin. Whatever you used it before, let's say you did it for transactions or for whatever it was good for, it's going to keep doing that no matter what the valuation is of, just like gold is, right? An ounce of gold is an ounce of gold. It could be 100 million or $5. It's still an ounce of gold. It doesn't change, right? So don't, guys, what the market prices your instrument at has nothing to do with its value. It has to do with capital flows going in that sector. And that's it. You can't confuse both. And well, that's tough to accept.
Let's talk about capital flows at the moment, because you mentioned tech stocks. Well, you can have a look at Tesla, and that's come off its highs. A lot of tech stocks are starting to be a little bit bubbly and frothy. But what do you see in terms of capital flows? Because right now, gold, love it. No one is looking at it. The gold equities seem to be, it's the unloved stepbrother, if you like. Cool. Love to see what the charts are telling you about gold and silver. A lot of our community, some are just saying it's all about the, what do they call it, forward-looking metals. So we're talking the sort of lithiums and the cobalts and the nickels, because they just say gold's out of favor at the moment.
Look, gold is a barometer of truth. It's a mirror of your purchasing power. I could, after this chart, remind me before if ever we start the interview, I have to show you what gold tracks right at, like after, because that's critical. People don't understand. So here, okay, this is the gold to SPX ratio. Okay, I'll try to make this here. So it's the one of the candles, okay, guys? It's this one here. And what I overlaid is the silver chart right here.
Poor old silver, yep.
So here is when gold is able to technically break out versus the SPX. So it kind of here's a wake up line. So here in 2003, 2004, it really started breaking out versus the SPX. So that means money, if had their capital flows, were favoring gold versus the SPX. That's the Rosetta Stone for all the miners, guys, all the CEOs, guys. Don't worry. When gold starts beating SPX, there's going to be so much money coming into your sector, you won't even believe it. Because right now it's hard because we're right here, Carrie. We're right about, we're right here. We haven't broken out yet. And this was just the rally in the 2020, right? And that small move of gold outperforming the SPX created gold going from 1,300 to 2,000, just this small move. So imagine when it breaks out above this line, when gold really starts outperforming SPX, because there's another concept in technical analysis called reverse symmetry moves. As fast as it went down, then it bases, the energy goes up as fast, just like everybody's selling, all these bag holders are gone. Nobody believes here. There's nobody to sell up here because they sold in the base. So this huge base, what it's serving as, once we break out above, we should rocket upwards. The same thing like we did in the 2003 to 2011, or it could be worse. It could be even like the 70s, like that could be happening also. So as soon as we break that above, silver will do something like this. It will just explode. And just to show the bullishness of this construct is even while gold has done a lower low here versus SPX, silver has still done a higher high. And we know gold is still much higher than its 2020 lows, or, it's still perched high. So that's called hidden bullish divergence. It's even while the capital flows are resetting a little bit in favor of SPX, and we're still below that line, the instruments nominally have not plummeted back to new lows. And just a final clue, guys, this is a 7-year rate of change for the ratio. So 7-year rate of change, what it means is if I bought 7 years ago, today, what's the performance on that, right? And here, right here, it broke out the moment 1, 2, 3, 4. In technical analysis, you need 3 touches and then a break on the 4th, it's valid. And the momentum, so the 7-year rate of change for gold versus SPX has actually broken out. We're still in negative territory, but this bottom formation has broken out. So this tells me.
So sorry to interrupt you, Patrick. That's the most telling thing, where that breakout down here, that sort of wake up above the 7-year average. Is that what you're saying?
Yeah.
And that's the sort of the call sign that you're saying, you know what? All the charts are telling me that gold is ready to break out. Or do you see it still consolidating for a while, potentially being a little bit sleepy for a bit longer?
Look, this is the trap of ratio charts, because ratio charts, both instruments could be going up at the same time, but one faster than the other. Both could be going down, one slower than the other, or one could be going up and the other one going down, right? It's a performance. So you got to look what's happening right now with gold and silver, why they're stalling, especially silver, why it's dropping slower. It's because those two metals, they're more than archaic stones. They're financialized instruments. So the gold silver ratio is actually a barometer for a market liquidity event, a market crash like the GFC event, March Madness. So if the markets think that there might be a crunch, like a crash, not in the bear market, like a crash, 600, 800, 900 points daily, like silver will get sold off, gold a little bit. And that ratio, the gold silver ratio, will skyrocket up, spike up. And when that ratio of gold silver ratio starts unwinding from a spike, like it did in post 2008 and when it did in the March Madness 2020, when it starts winding down, that's the market telling us, okay, there's no liquidity crunch. Nobody's going to sell everything, go on margin call, sell their silver, sell their gold. And then silver and gold, then they go ballistic because they're going to start pricing in the monetary imbalances that the governments or central banks are going to have to do, or what they did to save the markets that were crashing. It's like the best thing for right now for gold and silver is actually a market crash. It sucks for silver. It's gonna spike down, but the craziness of the monetary imbalances, which is going to destroy our purchasing power on the long term, is going to make silver and gold just go ballistic. And it's like you got to push that volleyball under the water to get that move up. And it sucks because a lot of traders are on margin and they ask me, when is silver going to break out? And you can't trade silver like a trader. You just can't. If you want to catch these huge moves, you gotta take a step back, and you gotta understand that even at 21, even at 15, 16, or even it goes at 11, it goes crazy, it goes to 11, that's $10 down. But the upside is 50, 60, $100, triple digits. I have targets like you won't even believe for silver.
Well, so, and you know what, and I think people have said this for quite some time, Patrick, that, you know, silver, because it's high back in the day, I think was $49 US. And a lot of people turning around and they say to me, you know what, silver's done nothing for so long. It's going to continue to do nothing. And it's almost like they feel like everyone's crying wolf about silver will start to move up. So it would be interesting to see why you are so strongly bullish on silver. And here's a chart. There we go. Look at that.
There you go. Well, guys, this is what's dangerous about spikes, because people remember that what they do in the headline grabbing, oh, silver spiked at here in 80, it spiked at 50. But look, how long did it stay there? It's not meaningful. It hasn't stayed there a long time. So what you got to do is you got to put in a moving average, and you got to, oh, not that one.
Yeah.
Okay, this one here. I'll take this one out. You got to put a moving average and a long-term one. So I'll put a 190, 192. I don't know. That's 16 years or something. And look at that. Look at the moving average for silver. I'll remove the price. Look, silver, people say, look, it's only, it's been going up since 1946. It's been going up forever. So I don't know what the people are upset about. The moving average is the 192 months. That's, I think, is that 8 years?
Yeah, we're glad you've got the calculator.
This is live. How dare I do stuff? 16 years.
16 years. Okay.
Because there's 16-year cycles in gold and silver. It's been going up forever. It's been doing
doing what it should be doing.
Yes. So silver, the trick is understanding, am I buying stretch? Like I showed you the Bitcoin chart. Don't buy here when CNBC or Jim Cramer tells you to buy it. Don't buy here when it's stretched. You see how far it is away from the moving average? You want to buy it when it's coiled and tight, like that Bitcoin. Look how coiled it is to the 16-year moving average. This is a huge rising consolidation. You're at the low part. And you'll see historically, it doesn't stay. Well, we could be going in the bear market like this, but as I showed you the gold to silver, the gold to SPX ratio is starting to turn up, right? There's clues that, and here we were coming off the lower and lower inflation, like peak inflation going down. And I'll tell you one other thing, that it's always, whenever I doubt myself, I did a chart. Silver never fails to do a new high after gold does one. Let that sink in. And it does a new high within 8 months to 40 months. So now gold did its new high.
Yeah, can we take a look at the gold chart as well? Because that's an overview of silver. But I'd be very curious to see what gold and finally the US dollar, which I think is going to get quite strong. I'd love to hear your views on the USD as well. But let's have a look at the overall chart for gold, because as you said, you're a contrarian investor, so am I. No one, it's the unloved cousin, as I said before, with gold at the moment, and gold equities. People just don't care. They're looking at future-looking metals. They're looking at the lithium, and the cobalts and the nickels, not the gold. It's just not it's not on people's radar at the moment.
Gold, it looks it looks scary. If you look at often a lot of things people they see this top here and they say, oh, this is 2013 again, right? It's over. We're in a bear market. But you got to go back to that chart I showed you of the gold to silver rate here. When we had this type of topping formation here back in 2011, 2013, the gold to SPX ratio had been running hot for 10 years. It's been going up. And I could have drawn you a bigger picture chart. It was hitting resistance. Right now, it's the complete opposite. Right now, and look here, the 7-year rate of change. I didn't even put on the chart, Carrie, because it's like super high here, the rate of change. We were stretched. Now, that's not what's happening right now. Right now, we have a similar formation. And the analog, the similarities, they end there. Because now, look, we're more like something back here, Carrie, than up here right now, the stage.
Got it. It's
still got to be wary.
What they call a cup and handle. I'm not a chartist, but
yeah, gold has like tons of them. So yeah, that's a picture perfect cup and handle right there. Silver has one. Silver has the most epic of cup and handles, like the biggest one I think ever. If I zoom out, yeah, that's like the remove drawings, remove indicators. Yeah, silver has one of the biggest cup and handles you'd ever see there. So those patterns.
Is that pattern telling you that it's been, the energy is building, but it's not there yet?
It's getting there. There's a transition right now. And there's one more chart. I have so many charts, Gary. I'll try to find it really. It's not tech. It's okay. I think I have to write NASDAQ latest. People are always worried. Okay, Patrick, let's say there is a crash in, okay, it's this one here. Let's say there is a crash in the NASDAQ or SPX, like what's going to happen to my gold and silver? Here's the NASDAQ. It crashed. Here's the NASDAQ closing below its 3-year moving average. And after that happens, gold usually bottoms 1 to 3 months. So gold, it was already bottoming here because it was long bear market in 2001. But after 1 to 3 months after NASDAQ closed below its 3-year moving average, showing like the Fed, whoever's the chairman, they must be going crazy by that stage, right? Because if you're below 3-year moving average, you've dropped a lot. So now they're like lowering rates, all cool stuff that gold and silver like. 1 to 3 months in 2001. In 2008, it took like 2 months after it closed below that 3-year moving average for gold to severely bottom and just skyrocket up.
Right.
And this chart is from June 13th. So I don't know if we're going to close. If NASDAQ closes below its 3-year moving average this month, for me, within 1 to 3 months, it's gold time for gold. It's going to be gold time because they're going to do a pit. They're going to rate hike, stop, like all these plans of rate hikes. They're going to go down the drain. It's over.
Sorry, what do you mean by the rate hike? So it's all over. Are you saying that they're going to reverse the decision to increase interest rates? They're going to say, whoops, it's all getting a bit. So if I can just put this into a quick one, you're saying that the NASDAQ potentially could crash, which in turn will have the Fed say, whoops, reverse the interest rate hikes, bring it back to zero again. But the carnage has already happened. Is that what you're saying?
Exactly. each time, look, when they stopped doing rate hikes and all these things, they cut. The market kept tumbling. They weren't cutting fast enough. And I could have overlaid like the Fed fund rates cut while the markets are crashing, and because it lags, I don't know, maybe now they're faster. They have techniques to make it faster. Like in March Madness, it was like everything bottomed at the same time, but gold went out the gates faster. And that's where we're at now. It's like, they're going to start, they're going to pause, and then after that, they're going to cut. But what's pretty crazy now is, Kerry, is this inflation boogeyman. What do we do with that?
Exactly. The genie's out of the bottle. It's going to continue. And you said earlier in this conversation, 10 to 20% inflation. Really?
Well, I don't like, there's going to be, I don't know about the exact number, but inflation will not, until, the way I see it is, until inflation expectations reach the highs that it were in the 1980s, then I think we're not even close to a top. So I could just show you, I just did a chart recently on expectations. So the Fed, it looks like they look at the US Michigan 5-year expectation inflation rate.
Right.
And look, in the 1980s, it was the inflation expectations were 9%, or they were, like, I don't have data before it would. So when everybody expects inflation to be super high and keep going high, that's when you should like say, okay, we're topping out. So look, we're rock bottom here. We're super low.
Yep.
Until we have expectations of inflation, no matter what the number is, Kerry, 10, 15, this thing is going to keep going up until we have inflation expectations at in those, even like, maybe double digits, then it's not finished yet. So
Patrick, we haven't talked about the US dollar, and
yes,
a lot of people talking about the fact that the USD is going to be stronger if you want to be in any currency, because we all know that governments around the world are getting out of trouble by printing more, as the US is doing as well. Everybody's printing more of what I call the funny money. But they're saying that I guess it's the Brent Johnson milkshake theory, that the USD will be the one that rallies and is stronger against all other currencies. What's your views?
All right. The US dollar, yes, can. Okay, I'll show you. I have two charts. The US dollar can go up nominally, but it's still an illusion and it's a trap. So I'll just show you the US dollar. Scrolling.
While he's looking at this, ladies and gentlemen, you can see the amount of information that Patrick has on YouTube. So I suggest that the first thing you should do is go and follow and have a look at these charts in your own time as well.
This is the US dollar index. So essentially, you're comparing US dollar strength versus the euro, because 68% of if I overlay the euro USD chart, it's the DXY. So the only thing you're measuring here is not purchasing power, it's just strength versus the euro.
Okay.
These are periods. And when it was created in March of 73, it was indexed at 100. And then you'll see this is an important historical median line. Here was a blow up in the 80s, and then down. It stayed about, it went up 60% above the median line, and it stayed there for 69 months. And then after that, in 1999 to 2003, it flared up. It went up lower, so lower high went up 20%, and it stayed there less time, 39%, 39 months. And right now we're right back above it. So this is
lower high, lower high, lower high.
Yes, lower high, and I think it's going to stay above the 100 less and less and less time, because it's like a baby. Like if I give you something, you're going to spend it, right? So this thing has a destiny to always go down, because I don't know, maybe you have some guests that chime in on the fundamentals, but even if I'm outperforming the euro and the dollar strength, if I have a currency that's going up, I'm just going to devalue it and buy myself goodies, right? I'll print more, like I have, and until I overdo it, and then I go down. But yes, this thing could still go up, but I'll show you why this totally doesn't matter for your purchasing power and for your and the purchasing power accounts. This is gold. I inverse the gold chart, so guys, don't get scared. So one of these lines, the black line is gold. See, look, it starts at $30. It goes to 2,000 here. It's just going down. But it should be going up, but I inversed it because I'm showing you the other line, guys, is the DXY adjusted for inflation. So I use the producer price index as a proxy for inflation because the producer price index, there's no hedonics in it. It's the actual costs and services of people producing stuff. It's like cost of metal, cost of wood, cost of everything. So that's a true measure of inflation, the producer price index. And look, gold tracks the inflation adjusted US dollar pretty close. Look, it's not perfect. And even if we know the DXY has been going up, look, even in the 80s, that peak here that it did higher, you see here's the 1960s, yep. 70s, look, in the 80s it did peak, but when you inflation adjust it, it's a lower high because that was an illusion. It spiked up, but there was still so much inflation in the early 80s that it was lower highs.
It was lower highs all the way along. We're running out of time, Patrick. There are so many charts, so much good information. I've got to get you back on so we can chat some more. But before we go, if you could just share with our viewers, what would Patrick be doing? What is Patrick doing right now? Because it's volatile. There's a potential market crash out there. How do people protect, potentially grow their wealth? Just 3 things that you would be doing.
Well, you got to take a step back. So like I showed you, I never go like monthly charts and higher. Take a step back, understand that presently it's a transition between SPX capital flows, instead of going SPX, going to gold. So the best thing, yes, cash is fine on the short term. Wait for that transition to go. If you want to pull the trigger on gold or US equities, stay cash or hold some gold. Like I've shown you the purchasing power, right? It's still going down. So gold's still outperforming the US dollar. And then as soon as that breakout line breaks out on my first chart, and then you get silver breaks out above $28, then it's like almost a done deal. That means the market has crashed already or decided not to crash. And then the market's saying, okay, there won't be a silver sell-off, but I have to price in these lower rates, all these trillions of dollars are printing. I have to price that in. Gold, silver off the gates nobody's going to hold them back. And the difference between now, what happened in 2020 to today, we're going in a long-term 8-year cycle that's going to bring us at least close to the end of the decades where gold will outperform SPX and silver, the miners, other commodities, uranium, all that, they will have those capital flows. They won't even understand why, but it's just these macro tidal waves going in there. So
what you're seeing is a flow into commodities, not just gold and silver, but your gold and silver will hold your purchasing power. Commodities will see an inflow of cash going into there. But for you, you're saying hold some cash, have some gold, have some silver, and just wait for things to start to move into those sectors. Would I be right? Is that a good summary?
Yes, exactly. Yeah. Just like you saw my NASDAQ chart, it's like we're within 1 to 3 months of finding out what's going to happen. Is it going to we're close to having a resolution there. So yeah.
All right.
I would definitely not hold NASDAQ. Even if it goes up, guys, it could still be losing versus gold. So you're not increasing your purchasing power.
Well, I'm going to get you on next time. We're going to talk property because we didn't even cover that this time. How can people find you, Patrick? No, I'm getting you back on in a month. There's so much we can chat about. Okay. Tell my viewers how they can follow you, not just on Twitter, but you've also got a website and you've got membership deals, et cetera, et cetera. So go. Yeah. You've got your 1 minute now.
Oh, so guys, well, go on Bad Charts One. Tons of free stuff. I love putting charts out. It's like a passion, and they'll give you great clues to what's unfolding. Bad Charts One on Twitter. And with Kevin Wadworth's North Star Charts, for you guys that follow him on Twitter, we have a website called northstarbadcharts.com. And it just happened that today we started a promotion on like 60% off on our yearly subscriptions. Oh. But there in that website, that's where we have the actionable charts, like the miners or whatever we see, charts that have action, low risk, high reward. They're all available on our website.
So that's for the members only area of the website. So as Patrick just said, what timing? 60% off. And by the way, I did not know this before we started. He didn't tell me that. So that's just coincidence that there's a deal on. So hop on to northstarbaycharts.com, sign up to their premium service. Patrick, we'll see you in a short while because there's so much more to chat about. Thanks for joining me on Small Caps today.
It was an honor, Carrie. Thank you.